Okay, so this is Friday's price action here. Now I should note here that in addition to the order flow waves, which we'll talk about in a second here, I also have our initial balance indicator on here, which I always do, it frames the day for us. And then I have our TDU toolbar up here, because I'm going to grab things from that here as we go through this. So with that said here, now you can see here that what we're working with here is we've got a zigzag here. We'll look at that in a second because we give you a lot of flexibility with regards to how you want to identify those swings here. And I think there's value in having those on here because it helps with the visualization. Now, Friday's an unusual day in actual fact because we have this very small opening range, and then we get this massive run here as the market completely rips off of the IB low here, and then we finish the day up here at highs. So on the chart, as we look here, so obviously below we have the volume wave histogram here. On the chart, you see the waves represented by the zigzag that we're using here. And then you'll see a couple of lines as well. So we see the orange lines here, which are noting volume divergence. And then we have the purple little triangles here, which we call a no interest event. So for example, we start here, we go straight down, very typical. Well, those of you that have done enough trading know that the market going straight down at the open after being up coming into it would be bullish. So the market we base down here, we've got this little basing before they decide to run it up. So from this low here, which happens to be the first test of the IB low, we run all the way up here. So this is much like a Weiss wave. This is a cumulative. So what it's doing is each bar is moving. The total volume for that swing is giving you a cumulative total. So as we get up here to this pivot high, we can see that this was the pivot high. What do we have? About 200K of volume through the course of that wave. Now, when we compare waves to waves, we get an obvious identification of divergence here. So if we look, we have this massive wave here, a small retrace here. Then at this moment in time, we get a purple triangle here. Well, the implication here is that there's a lack of interest in sellers. So a couple of things are happening. How are we deducing that? Well, in the reality of the way the market moves and just indicators, there has to be a trade-off here because we can't identify that is a pivot until it moves far enough away from it. So you can say, oh, okay, I've got a pivot because we could easily just go up 8-9 ticks here and then roll over. So there has to be enough distance here from that pivot to where we can say, okay, that is a pivot here as the market has moved far enough away so that we can confirm that that's a low. So in this context here, that may not be immediately usable to you here, but it's a point of note here that I have a lack of sellers stepping in here to drive the market back down or to come to some prior structure here. So as that moves away, then that's established as a no interest long. Now we come up to the pivot here where we can now compare waves to waves. So looking below, we can see obviously, right? So this wave here from the pivot low to this high is dramatically different. So we get a divergence signal here, right? Which is reflected on the chart here two ways. So of course you've got there's an orange outline to that bar. There's the line marking the divergence, and you see it above and below, both in the histogram as well as on the chart. Right? So it wouldn't be a requirement that you have the histogram on the chart if you had other things down here that you didn't want to spare this real estate. But I think visually it's very important to have that here. So as we look at this, now we come down, now we get another no interest long here because as we can see, we get comparable here. We have less enthusiasm here. The sellers are less aggressive here. So we get which you can see reflected here, we get that difference. The reason it's not divergence like the one here is because we don't get a new low. But clearly you can see that the sellers this was a very short-lived move lower before we went back here, and then what did we do here? Right? We double top. Now, as the market starts to move down here, I get a more substantial retracement here reflected in the sell volume here. A swing up, so there's your classic pattern that we were just talking about here. So here's your swing, your retrace. Now, what's happening right here? And then when we get to this point, as we complete that pattern, what's happening at that pivot? Well, so there it is in just right in front of you. So at this moment in time, do we have enough here to make a decision as to whether or not that's a trade we'd want to take? Well, in this context, because we have context here, on a Friday afternoon, that might have been something that you were considering, because that looks like it's, I'm going to use the dominant here. It looks like that's a technical pivot. So we go right into the golden zone, as you can see, and we come up just shy of the target here. But we aren't getting any additional insight here other than we have a technical pivot, right? So it's from the swing low to swing high. We go right into the golden zone. As we head down towards the target here, what happens? Because it would be very easy for you to be looking at that saying, oh, well, hey, I've got a golden zone. First target here is just below. Perhaps we're going to sell off going into the close on a Friday, right? That would have been a reasonable thought. Oh, it's Friday afternoon, they'll probably sell it off back towards VWAP. Well, as we come down here and we're approaching that first target here for the algorithm, that I'm assuming, I shouldn't assume that, but this is a very common algorithm here that we talk about a lot. If you're not familiar with any of that trading, I'd encourage you to go look at our measured move indicators. So from this, as we come down here, I'm approaching that target. I would have to be mindful of the fact that, hey, I'm approaching an algo target. Means that there's an algorithm here that's going to start to buy if this is a front run off the target. But of course, in real time, you don't know. So as the market starts to move away from that, again, it has to get far enough away so we can establish this as a pivot. Then the purple dot fires, so we would have a no interest long here, as in sellers had the opportunity to push the market down here, but they failed to do so here. All we did was essentially just get a few ticks through this pivot low. I mean, it wouldn't be unreasonable to call that a double bottom, and then we would carry on with the day's trend as we move higher. So the market has to get a little bit of distance. Let me get you out of here. From this, come here. From this pivot here, for us to identify, oh, not only do I have a no interest long, because I can see visually, I can see that the sellers are less enthusiastic than they were here, even though I do get a new low, but it's the wave volume here is higher. It's not as low as the prior swing, so thus I get divergence. In addition, because it's a lower low, I get the divergence on top of the no interest long. Right, hopefully that makes sense. And then as we swing up here, now this is the end of the day. You're likely not trading after 4 o'clock on a Friday, but you just see the point being demonstrated here, because that looks like that's technical as well. So software algorithm's not going to care. Probably did trade that. Looks like that was a measured move actually. So looks like they got this one. So here we're working off the 50, and then they run out of time. So not to digress into that, but that's the foundational pattern that moves the market, and it ties right back into what we were talking about, which is all the market ever does is swing and retrace. Right now we're going that way, or we're going that way. Now Friday's an unusual day because essentially we just have this massive rip, and then we consolidate and a little push higher. Let's go back a day where we get something we all deal with, right? We're not going to get those massive trends every day, although lately the volatility's been pretty remarkable. But here, this is just a very typical range-based day. Now there's a drift lower here, as you can see. We're breaking the IB, but this is very, very typical for the S&P. So what you can see here now, this is a little more pronounced because we have the swing patterns here are easier to spot as opposed to Friday, where it's just one massive move. So here, this as we look in context, here's a couple of things to note. So right off the bat, coming off of the pivot, we come straight down into the open, retrace. Now, so there's the pattern we talked about here in the first video. Here, swing, retrace. Okay, we break the low, we get a pivot down here. So well, for those of you that know our material, if I put the measured moves on here, you'll see that in actual fact, this is all very technical. This is all very software driven. This is the dominant algorithm of the market. So we swing, retrace right to a golden zone. We come down, we get this target, green line being the target, if you're not familiar with this. So as we do that here, we just focus for a second, swing, retrace, right? That's the question. What can we deduce anything from this event as we sit here? We get a down bar coming out of that here, but you would need to know where you were here, that was the algorithmic sell zone. So as we're heading back down here, now we come right down here with this. This is also very common here that you'll get a front run by a tick or two, just as you get a front run here on the golden zone. But note, as we get this here, we get a divergence long. Right? So we can just look at the volume in the two bars and see that the volume here is less than it was here. So less enthusiasm from sellers, and then we pop right back. Now this happens to be the first test of the IB low. We pop right in. We go right to the IB mid. Now we're back down to test the IB low here, and of course you'll notice that once again there's the algo pattern again. It's all it did all day long. So we swing from here, we come literally, we split the golden zone and go right. Now this time we go a tick or two past it, right, for a little clearance. Now as we get to that green line at that algo target here, wouldn't it be beneficial to you to recognize here that additionally here I have volume divergence? So buyers less enthusiastic. Oh, of course you could just look at this and say, okay, we're coming into some prior support, or pardon me, some prior resistance here. So the fact that we're completing the pattern, well, so if you think back to the first video, if I do it this way, you could simplify it and think of it this way, right? So here's the retrace before we end up down here. Well, get off of there, right? So, but within the middle of that, we have the very pattern, right? This is literally as I drew it for you in the first video. There's the pattern contained within the larger swing retrace that ultimately breaks this low. All the market ever does. So as we sit here at this pivot here where we have the obvious prior resistance, we get a volume divergence here, right? So reflected here, orange bar, so the lines on the chart, hard to miss it. Now remember, the market has to move just enough away from that to where it can lock it in so that we can identify this as a pivot, and then we get chop again. Now here we get a no interest short. You can see it reflected here. The market comes up. If bulls were going to take over and we were going to get some follow through to go challenge the IB high, well, that was a reasonable spot for them to do it. They can't do it. So as we move away from that, and you see the no interest long. And again, this is a good example of why visually it's important to be able to see the waves here, because this retracement here, we don't get any insight relative to the prior wave because we're not getting a higher high, but we can see that the volume is lower. Right, so if bulls were going to take over here and drive it higher, well, they fail to show up to do so, and then we're back down here to challenge the lows. And here again, very much like what we were talking about on the early video here, where in this case we get a triple bottom. Now you come down here. Now are we going to keep going? Right, so you're wondering at this point. You say, well, hey, well, there's the pattern again. I got to swing. I got to retrace. Now, am I going to finish down here? Well, effectively, we double bottom here. You can see it reflected down below here, so we get a no interest long. Now, again, that doesn't fire until we get a couple of bars past it, so we can lock in, say, oh, we have a pivot here, but you can see it reflected down here. No interest long. Not divergence, because we don't get a new low like we did here, or a new high like we got here. Up we go. Now we essentially triple bottom. Now we're getting into the end of the day. So now while you do get this divergence here, this is in the transition from one day to the next, or we're going into the ETH here. So not a signal necessarily that you'd be pursuing. You might. I mean, obviously you have it right there. But you know, that's sort of beside the point here. And then, so I think you're getting the idea here as to what that's showing for you. Now here, now we go back a day where we had the massive sell-off that's corrected by Friday's massive rally. Well, here you can see as the market essentially from this golden zone here, as we swing, retrace into that golden zone, as we start to head down. Now, of course, there are going to be periods here as the market is stalling here where you're going to see some volume divergence. Now, you have to have some awareness of context here. While we do see some divergence here, we've got a pretty firm trend that's underway here. I mean, God, even if you just took a trend line on put it all of this, I mean, fairly obvious the market is falling hard. It's some news driven. So while we do get some of these no interest or divergent signals, you'd want to be mindful of the context here, because what we can see and say from this pivot as we head lower, we do not get a higher low the entire way down until we get to this pivot. Right, it's all lower lows, lower highs, lower lows, lower highs. Even if you just had a simple 20-period EMA on this, it would be very obvious. Just look, well, oh, I've got the cum delta on over here. But it's, in these waves, while, okay, there might be a little something there, at the very least, before you'd really want to pursue going counter to this pretty pretty established trend, you'd want to at least see a higher low, right? And then at least at a smaller degree get a higher high. Well, we don't get that until over here towards the end of the day. And that's 3:06 in the afternoon. Now we get divergence here. Now market's pretty long fall from the IB low, so a pretty good fall here. Now you know, you wouldn't know here, right, until you get here that you've got evidence that, hey, perhaps. So I would not advise, and this I think most people would agree here, that this trying to pick the turn here is a fool's errand, right? Because I mean, you wouldn't know here, right? It's always easy in hindsight, right? Hindsight trading is we're all brilliant, but so here, I mean, you wouldn't know. But it does start to stand out here. But you had the same thing here, right? You had the same thing here. You might have said to yourself, oh, okay, well, hey, I can see 3 in a row here. I've got good divergence. We're going back inside the IB, right? That's very short-lived, and then again, and down we go here. So again, context is significant, but at the very least, in a hard trend like that, you wouldn't. I'd like to think you would at the very least, rather than try and catch the falling knife, you'd want to see evidence of that trend starting to turn. And the first evidence is here because we get a higher low, right, which we did not have the whole way down. Now we get a higher low up. Now I got a higher high. So you can see here, now this is significant because in addition to the fact that we can recognize a higher low, it's more significant in our view that I've got a no interest long here. Because if bears were going to just, okay, oh, we had a little retracement here, okay, so we got a higher high, but we're going to jam this down here towards the end of the day. The fact that they can't get, because you know there's going to be stops there, they can't get a new low here, and the volume is starting to dry up, tells you that low here is significant. Now we break that, now we got a higher high. Now we get a little chop here, and we're winding down the day. Note it's another golden zone. All right, I think it looks like it hits over here. Actually, that's a big one, so that is likely not hitting until over up here. But not to digress, but my point being, here's the first evidence that perhaps now this trend is starting to turn higher high, higher low. And in fact, we can there's a feature you can turn those on, but I took them off, so I didn't want, because they will be right on top of the triangle here. But that's a feature if you need to see that right now. Hopefully, right, you guys would recognize, oh, hey, something happened here. I got a higher low and I got a higher high. So, but for the novice trader, someone who's new to this, that can be helpful. So you have the option to have it tell you higher high, higher low, higher high. Swing, retrace, golden zone. There it is again. And here you see this one here it might be a trade that you would take because I've got confluence. So not only do I get divergence between the two sell waves, I'm at a golden zone, right? And then I get that divergence here coming out of there. So at the end of the day, that's not a bad looking move. I mean, it's bigger than you think, right? There's 33 ticks, 400 plus, right? Just on that last, at the end of the day, on that last little swing. All right, so now with that said, so I think you get the basics of the volume waves, the no interest long short, and then the divergence here. Now let's look inside the indicator here. So stand by for a sec.